Hello. Today is Sunday, October 26, 2025, and I am Jason Shapiro with Crowder Market Report. Today I want to do a quick video. I get a lot of questions from people like, okay, Jason, your COT indicator seems to work pretty good with futures, but I'm not a futures trader. I only trade equities. So therefore, how can this stuff help me? And quite frankly, there's a number of answers to that, and I'll just go through real quick a few of them. First of all, clearly, you can trade, ETFs, which are equities, right? You see that something's massively crowded in just about anything. I mean, there's ETFs for all this stuff: stock indices, energies, metals, fixed income, currencies, you name it. You got ETFs for all this stuff. So you can just straight up trade the ETF rather than the futures. That's the simple answer, obviously. But there's even better answers, I think. Because if you think about it, we know that a large portion of a stock's movement is going to be related to the stock market itself. There's a much higher probability of any individual stock going up if we're in a bull market in stocks. And same thing with any individual stock going down if we're in a bear market in stocks. So clearly, if we're seeing massive crowdedness on one side of the stock indices, like for example, we saw in this area and in this area, right? And that indicates there could be a big move up in the stock market. It's going to be a much better time for you to buy just about any stock, right? So that would be my first sort of point about this. And then my second point would be you can start to look at the different indices, the Nasdaq, the Russell, the S&P, and you can see where the things are most crowded there. So let's say people are most crowded short Nasdaq for whatever reason. Well, and there's a good chance that should the market start to move up, the risk reward would be to be in the Nasdaq stock. So you can start scanning your stock list for ones that are correlated to Nasdaq stocks, which obviously is going to be the tech stocks and that stuff. If all of a sudden the Russell starts to show they're the most crowded short, there's a good chance the Russell's going to outperform. So you can start scanning your Russell list, things that are correlated to the Russell, start buying there. That's sort of level 2 there, which helps a lot. Level 3 to me becomes when you get to see two different things. Like you see that the market is way too short stocks. So there's a good chance that the stock market is going to start squeezing higher. But like here in this case, for example, here's gold, right? This was here, October 22. You see, this is the lowest amount we've seen speculators long gold, which on my index level would indicate that that's short. They're very short gold relative to where they've been in the past. And we also had stocks as a buy down there. So if we see stocks as set up as a buy because people are super crowded short, and then we see gold set up as a buy because people are super crowded short, well, then it gets interesting because now we can say, let's start scanning our gold stocks for a place to go. Because if both the stock market and the gold market are set up to have a big move up, then probably the best place to be would be gold stocks. And in this particular case, obviously that worked very well. Gold stocks have been very good outperformers during this bull run. And there's an indication of that. So that's the third way to do it. And there's many other ways to do it because you start looking at, and I do this in my report every week, obviously, but you start looking at the relationship between what's going on with stocks and bonds and dollar and all that, and where is the positioning set up. So it can start to help you, if the market is reacting very well to lower interest rates, then you want to be monitoring the position in the bond markets, right? If they start getting way too crowded long, there might be some risk to the bond market not going up anymore, and therefore there might be some risk to the stock market, That's sort of another level of doing. Same thing with the dollar, and same thing with all these cross assets. And this is something that takes a little bit longer to sort of understand and master, but that's kind of the purpose of my newsletter as well, and everything is to help to sort of see these relationships. But even without that, like I say, the easy ones, just doing ETFs, doing stocks in different sectors based on what sectors are showing, and all that can really, really help in stock selection and finding best risk reward sort of individual equities as well using this futures data. Okay. So I hope that helps. I can tell you it's very, very interesting. We have a lot of people on our Discord that do this type of stuff and had a lot of success doing this stuff, and they only trade equities. So anyway, take a look at that. Let me know if you have any questions. Always happy to hear comments and questions. Please like the video if you like it. Please subscribe, which is free, so we can get this kind of information out more. And I hope everyone's doing well, and we will talk again soon. Thank you. Hi, I just wanted to say if you like these videos, we do them 4 days a week, Monday through Thursday for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.